The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin on TFNN.com, coming to you live and Tiger TV on your mobile phone at TFNN.mobi and streaming to you inside the eSignal platform. Let's check out where the markets are at right now. We got the S&P is down 26 points. We have the Russell is currently down 18. Dow is down 191. NASDAQ down 62, continuing to get hammered with the Greece crisis going on, and of course with China getting absolutely slammed. They had to close down 40% of their stock market last night, lost a couple trillion in value, and despite the federal intervention that was going on, didn't really help, and actually it's created further panic, and that is just spreading globally. So a lot going on right now. We got gold right now is up, surprise, right? So in the midst of all this, gold is currently up. Let's see, we got 9 points right now, so 9.4 points. Copper's also moving up. We got oil is down amid everything down $1.11 right now, and so pretty nice moves. We got some huge moves in oil yesterday, and continuing to get some great moves. So been a great market to trade. Big trends there. Ags sort of quiet. We got corn is up $1.25. We got soybeans up 8 points at the moment. Looking on over at bonds, they're in slight positive territory, but the dollar index is in negative territory. Euro dollar is down, and that just continues to be the theme there. And it looks like it's down 74 ticks, or how many? What is that? Let's see. Okay, all right, there we go. But anyways, it's down a lot. So euro dollar just keeps continuing to get it slammed, and it doesn't seem to matter what they do on it right now. They're trying to pump it up, but let's see. I'm trying to pull up an update on that to see if I can get it for you compared to yesterday's price. But it looks like TOS maybe give me a little bit inaccurate data on euro dollar. There it goes. Okay, I was like, it looked like it was up, but ECB has been pumping. You know, as they started their recent program, not so recent, but this year on the quantitative easing. You got to be sure that they have that federal intervention pump, handle at the ready, and it's just emboldened. It's been two different sides going at it, and Greece saying, hey, here's good luck. We're gonna do what we're gonna do, and so you're gonna do what we want you to do. And Europe turned around and said no. They said you have 5 days to figure your crap out, and if you don't, we'll be fine and you'll be out. So they literally, Greece called Europe on their bluff, and then Europe called Greece on their bluff. And Europe went in and, like I said, just pump. But it looks like they're actually up 74 pips right now compared to where they have been. There's been some excellent volatility constantly flowing over on the euro, and that's been one of my main trading vehicles this week. We got the euro yen on the flip side is down. So euro yen right now is actually down 135 pips. So looks like, the yen's getting stronger against the euro. Euro pound is up slightly, so up about 10 pips. We got the pound dollar down 107 pips. Pound yen is moving down quite a bit. Let's see. Let's look at that pound yen, because that just looked almost unrealistic. But we got some good moves. Like I said, it doesn't matter if you're trading currencies right now or if you're trading indices. You ought to be enjoying trading as long as you aren't fighting the trend too much. But yeah, pound yen down 400 pips, and I thought that was too much, but that is not too much. I wish I'd been trading that one last night, right? But down 400 pips and just falling like a rock. US yen down 199 pips. Aussie yen down 144 pips. Aussie dollar down a mere pip. So the yen is just getting stronger amidst all this. And really fast. So deflationary strong. And so we got dollar franc right now is up 2 pips. We got the dollar CAD is up 12. And so just some great, fantastic moves. A lot going on. But again, Europe rising on, optimism on a Greek deal. I think, they're going in back and forth, and I don't know if there's so much a deal. I think they're just literally saying, hey, you know what, we're going to call it. And markets do like sort of solid stances versus just, oh, what's going to happen? What's going to happen? They're like, hey, they're out, they're in. But again, they can pump that handle. They can make that currency do what they want to with all their federal intervention to a certain point. And but we'll see where that's really going to go. There's been, one new story came through. Let's see if I can find this one. Fresh optimism for a new deal. Says they had a deal. The French Prime Minister, let's see what the story just said that came through. So the deal is within reach, and the basic deals have already been laid out. The fall's commitment about restructuring not being taboo. The euro reacted positively. He said it's vital for Greece to stay in the Eurozone. If they were to do so, it would be a geopolitical economic consequence to the world. So to pour cold water on it, we haven't heard from Germany yet, and they have to have it's not really a Congress, but sort of a Congress. They have to basically vote to continue to allow this, and they're on recess, which means they have to pull them back from recess to vote on this to allow it, and they really don't want to do it anyway. So because they have the last word, they have to accept it, and they have to get basically their own, Congress type body has to vote on it. I think that's going to be the hardest measure. That's what everybody's worried about. So we'll see about that new deal. They got a few days, and no matter what, it ought to cause some nice volatility. So just keep taking advantage of the volatility. We got treasuries coming out. Let's see, we got FOMC coming out today. So make sure you're ready for that. That's going to be the big thing. The meeting minutes coming out at 2 o'clock. And, then there'll be FOMC Williams. So he's going to speak at the same time. Economic Outlook at the International Conference in Los Angeles. I'm sure there's going to be a lot of questions. That's not a major press conference. Again, he's speaking, at a conference. It's not a press conference. But there'll be questions asked, and so I'm sure they're going to be watching a little bit tighter just because his speech happens to be at the same time as the FOMC meeting auction, or meeting minutes coming out, looking at the outlook, and basically them deciding, whether or not they want to raise, lower rates, all that fun stuff. But anyways, people ought to be paying attention to every word, and it won't probably include, my guess is it won't include the Greece stuff, but it may include some of the outlook. You just won't have some of the most recent information and thoughts in it, just from the past, day or two, because it's not a FOMC press conference. It's the minutes. And the minutes basically it's a record of the most recent meeting provided in depth. So, but depending upon what meeting they're recording and releasing, they may not want to give too much detail. We'll see. Just beware that, that could shock the markets, or at least give you some nice volatility at the very least for about half an hour to an hour after that comes out. Tonight, we got Aussie coming out with their employment and unemployment rate. So their NFP, if you will. So that's going to be coming on out. So be ready for some volatility off that news. And Japan has a 30-year bond auction. Let's see. That's our main topic for today on the news. And let's see, the China growth, like I said, that's just been pretty massive with their crash in their market. And it's not just a little drop. It's been a massive drop. Brokers have been trying to buy stocks. The federal government's been trying to buy stocks. They've done everything they can try to buy them, and it was just pure panic. And like I said, they had to close down over 40% of the different stocks that trade on the exchange. Microsoft is laying off a ton of people. They don't want to give that story away anymore. But 7,800 people being laid off, so that's pretty rough. Hopefully they'll be able to find some new jobs. But second biggest layoff apparently in history, or it's history anyway. 7,800 people. Let's see. Trying to make selling for big investors illegal. So if you're big, you gotta just take the punches. Is basically what they're saying. See if I can get this. I cannot get this to load up. Okay, we're just gonna have to make sure we get the direct links in. Make sure everything else is working fine. Okay, anyways, but one of the big stories, it got so bad that they literally made it illegal for big investors to sell. And I remember this happened actually during 2009 or 2008, 2009. I remember them actually like talking, like they were starting to make certain stocks where you couldn't short sell them, and they were putting all these extra short sell rules in. And it's like, well, people can just buy puts and sell a call and do a synthetic short, but don't. And if they think that the big firms aren't wise enough to go in and just do a synthetic short to offset their position, then they're highly mistaken. But that's regulators that don't know how to trade. And I remember whenever they were making certain stocks, who was it? GM, I want to say it was. You could go in, like, you couldn't short sell it, but it just kept going down. But you could go in and buy puts and exercise them. And so you go in, you'd buy the puts, couldn't short sell, they'd short, then you'd buy the put, you'd exercise it, you'd be short from 30, 40 cents higher, and then you just close the trade. And so there's a lot of ways to short sell without short selling. And like I said, the equity market's going on down. Let's see if any of these, it looks like all these seem to be, I had them up, but they seem to, there we go. But yeah, they're going on down. And the Greek crisis having a big impact on them. It's not Greece that's bringing them down. That's just one of many things just adding to the fire. But yes, this is they suspended 40% of their market capitalization, and 2,800 companies listed have now been suspended from trading just because they were they were falling so far. We got pound dollar moving down at 1 month lows, but that's nothing compared to, like I said, the pound yen and its massive fall off. So just continue watching those and take advantage of going on in, looking at the Greek holiday, the bank holiday. Bankers have been enjoying some days off, I guess you could say. But they're going to go at least through Friday, and it's going to keep going through unless they get a deal. They don't have the money to let people cash out. Anybody who can is going to. So they've been limiting to like 60 euros a day out of ATMs. The ATMs are running out, and they won't even open the bank unless it's for an elderly person that doesn't have a bank card. So it's been really, really tough, really crazy over there, and I'm sure the people are having a rough time. And we'll see how it plays out. Stay right there. We'll be back after this.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. And I finally got that story up just where they're limiting and locking down many of the major shareholders, corporate executives, directors from selling their stake for 6 months. They're basically $3.5 trillion has already come on out of the market. And if they have more than 5% of the stake in a company, they can't cut their holdings. I mean, it's pretty rough. So like I said, but as long as they know what puts are and how to use options, then they'll be just fine. So hopefully, let's go to next thing. Hopefully everybody had a great 4th of July weekend out there. Hopefully you had a safe weekend. We went out with my family to the lake and family lake house, and there was, I don't know, about 30 of us that all got together and we're fishing and out on the dock, and just the kids got to play and got up the sparklers and Roman candles, all that fun stuff, and set off a bunch of artillery shows. Somehow I got put in charge of setting off all the big fireworks, and so me and one of my nephews did all that, and just had a great time. And it was awesome because there was just dozens and dozens of people around the lake setting off fireworks. It's probably one of the coolest shows I've ever seen, just because we constantly had stuff going off everywhere. And weekend before that, went on out to the World Championship Rodeo. My daughter, Felicity, she has been, as you may know if you follow on the show, been very active in riding this year. She actually took up a competitive rodeo this year just a few months ago. And with that has actually started winning quite a bit, and got qualified for the World Championship to go this year, and for the paint section. And when she did that, she actually got the ability to compete against 13-year-olds and 18-year-olds, and she won. So she actually took first place in the World Championship this year. Let me see if I can find some of those pictures. I'll show you. And here we go. Yeah, it's gonna pull up just a. So that's her picture with all of her checks. She got over $1,000 in checks. She got cash checks from jackpots. She got the World Championship in pole bending for 13 and under. She got the Reserve World Champion for pole bending in 18 and under. She got top 10 in barrel racing. They got buckles and sashes and ribbons, and she got 2 jackets, and just did really, really well. And she's really trying to get in gear so she can, barrel racing is her big thing, so she's really wanting to take first place on that. And got a big old smile there, and I'm very, very happy. And she just had a great time. And so she got a couple more rodeos coming up this weekend, and next weekend has some big ones. And just flying around. And good times with family. And like I said, she's just taken off. She's really taken to it. So we've been proud of her. Anyways, but I hope you and your family had a great 4th of July weekend. And like we talked about, the markets have been going just absolutely insane. And the Greek situation, basically where Greece can't afford to pay its debts, and the European countries are getting sick of funding them. And there is no provision in the whole Euro agreement for a country leaving. They basically said it was the unfellable currency. So basically the Titanic. And they just thought it couldn't sink. And all of a sudden one of the countries goes rogue, and the people voted this weekend. They went and they put to a vote, and the majority of people said, we don't want to give in to any more of these austerity measures. They basically said, we'd rather have the next 10 years be hard and rebuild as be in debt forever to Europe. And so we're not giving in to all this. We'd rather just take our lumps now and move on. And that's what the people voted to do. And Europe was not happy with that at all. They expected that there was commercials going. There was Armageddon commercials out there. I mean, they were really, really, really pushing. They were really pushing to get a lot of things up and running, and they couldn't get it up and going. And so they found that out, and now everybody's like, well, what are they going to do? So are they going to backstop their currency with yen? Are they going to backstop it with won? Are they going to make the drachmas? Is there going to be a new currency? They have a deal going on with Russia. So we'll talk about that. So it's opening up a lot of interesting dynamics. And we'll talk about that more when we get back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Alrighty, folks, going back here to the Diagnostic Trading Hour. And so like I said, just, Europe's been going absolutely crazy, and Greece, basically, they have several things going on. Some of the theories that I've read, but also some of the realities. They have a pipe deal now with Russia to become the major supply chain for Russia out to the Baltic Sea there, and they actually are going to bypass Uruguay. So that's a big incentive for Russia, and so Russia obviously is going to be somewhat incentivized to help them in any way they can, especially if they're not part of the EU, because then that gets the U.S. out of, their hands out of them. And so, with the U.S. being involved in Uruguay, it's like, hey, if Greece is not part of the EU, then, and they are a NATO member, that gives them access to NATO, that gives them, that oil pipeline, that gets the U.S. not interfering with their, their oil. There's a lot of little, things going on all at the same time. Also, they're looking at signing a deal to actually allow them, or they already have, I don't know if it's in process or done, but actually allowing them to dock, major ships at Greece. And, if it ever became a standoff, obviously then Russia could dock more serious vessels right there at Greece, too, to help defend them if needed. And so there's just some, I'm not trying to stir anything up. I'm just saying these are actual facts. These are things that Greece and, Greece has been basically flirting with Russia on. And so they put the oil pipeline in place. They're letting them to dock ships there. And so that creates a whole new interesting dynamic. And then, of course, China looking for a place to, because they have the capital, where are they going to put it, even though they're losing a lot of it really fast. So where are they going to put that cash? And can they get another currency to maybe use their currency as a reserve currency instead of the dollar or the euro? They have their own World Bank that is set up in basically competition to the one that's led by the U.S. And so that would give them, hey, now 2 countries, and then they'll, they add on more countries using, one as a backstop as a reserve currency. And so it just, it opens up a lot of interesting dynamics. And, obviously Europe and the U.S. are very aware of this, and so they're going to try to get involved as much as they can and stop it from all falling apart. But they're going to have to give a lot, which means they're going to talk Germany into giving a lot. And that is really the biggest trick out of everything that's currently happening. So that's just trying to give you a summary just on everything that's happening with it. With China, they're having a really hard time. They've been trying to stop them, like I said, from falling. They've been intervening. They've been literally buying stock. They've had brokers buy stocks. It's just been spent panic. And they've been overinflated for quite a while. Like it's been coming, and it is spilling over into the U.S. markets, and that is really right now, because Greece is sort of in a state of hold. That really is the biggest impact on what we're seeing in the U.S. stock market right now is China more than Greece as far as the last couple days, and it's going back and forth, but that's been the big leading thing that's been crashing everything down. But let's see here. If we look over, just a couple charts. Let me see if I can get them up. It may take a minute to load everything that I want to put up. But let's see. Trying to do that. We'll try to do some chart time here in just a minute. So, one of the things is a lot of times people are scared off by the news. I've noticed this in some of the rooms. They're like, oh, wow, things are really volatile. Well, I guess I'm out this week. If you don't know how to trade it, I understand that. At the same time, this is when you make your money trading. These are sort of the days you trade for. Ben Lichtenstein down at the CME does the pit audio and Trader's Pit audio. And one of the things he says, he has this big plaque behind his, little boot stand, whatever you call it there, and, his spot in the pit, up above the pit where he makes out his calls. And it says, if you want to be here for the good days, you got to be here for all the days. Okay? These are the good days. As ironic as that is, these are the good days in trade. The big volatility days are the good days in trading. You have to learn how to trade trends, which just follow them. Okay? When it's volatile, when it turns, you don't outguess it. You go with it. When it turns back, you get out, you go the other way. You don't waste any time trying to become the market guru and outthink the market. You really, really got to go with the market. Whatever it's channeling and chopping a little bit, you look at stuff, but when it's turning, you turn on a dime with it. And this is where you want to use spreads. This isn't like you're in the money binary territory. Things are too volatile for the money binaries. They're going to flip really fast. And it can be a lot more challenging. Maybe some at the monies going for 20, 30 bucks. Things like, maybe, 15 to 25, really probably an average of $20 profit on the trade, but not necessarily ideally conducive for your in the money trades. Implied volatility is going to be higher. So your out of the money options are going to be more expensive. Doesn't mean you can't do them. It's going to be a little more challenging. That's why at the money sort of become a little more conducive. The thing is, when IV goes up on a binary, all the price gets pushed towards the center, towards 50. Okay? And with that price pushed towards 50, then it's easier just to trade the at the money contract and then grab $15, $20, $25 on it than it is to try to get an out of the money that is going to be way out. Because when it gets outside of the 30-70 range, they slow down. It gets harder to trade them. So trade that faster contract and, maybe 30, 35, 40, 45, 50, 55, that type of thing, but in that range. And you'll find that it's a little bit easier to get your trades on and off again. There's people are scared of spikes, they're scared of flash crashes. Okay, this is a reason why I trade Nadex, or I hedge my futures and forex trades with Nadex. Is one, I don't think we're looking at a flash crash issue. I mean, the thing's just going down. It's not some oops and bounce, and I mean, it's going down. We go over, we can look at, just some basic charts. I mean, right there, that's the pound yen. I mean, that's not a flash crash. That's, going on, 20 hours of 400 pips down. Okay, that's just down, 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 down. We go over, we look at, NASDAQ. And there's no flash crash on it. It's just moving down. So over here, came down, bouncing back up, starts moving on back down. And, I mean, you just really got to go with it because it's going to be a little choppier. Okay, so that's why I said when things turn, I mean, you turn with them. You really go with the current price action. And it can be a little more challenging to trade. So use defined risk instruments. Be ready to have wider stops. This is one thing a lot of traders don't understand. When you're trading in a more volatile market, okay, where the average move is 30 points, but now all of a sudden it's 60, okay, you have to have wider stops, which means you may have to trade less size. If you're used to trading, one NASDAQ future, what do? Well, that's a great benefit of spreads. You could trade one spread, and it's equal to half of a NASDAQ future. Okay, it's $10 a point versus $20 a point. Ideally, you're trading more than one contract at a time because that makes it really hard to let your trends run without doing more than one contract at a time. But you really have to learn, how to put some of these different pieces together. And let's see here. This is really interesting. This crash we had. It's not really a crash, but the New York Stock Exchange has halted all securities. Wow. So we're gonna stop and look at this. Equity trading was halted at the New York Stock Exchange, in the biggest American venue for stock. Addressed a computer malfunction and canceled all open orders. We're currently experiencing a technical issue. We're working to resolve it as quickly as possible. Said a statement, we'll be providing further updates as soon as we can. We're doing our utmost to produce a swift resolution and in timely manner, order and reopen the market. Stop trading on the exchange platform at 11:32. Of course, they're continuing to trade on NASDAQ, BATS Global, things like that. So it's not that stocks can't move around, but they closed them down just directly on the exchange itself. So 50 different private venues where stocks can change hands. While today's issue doesn't affect transactions on the company's main markets, it can impact, obviously, the indices derived from that. You can still execute New York NYSE stock, which is interesting. Other venues are still available. Dark pools are still available. It obviously is affecting prices of the Dow. Be really careful on settlements when they're locking down. If you're trading an indice, okay, when they're locking down certain stocks, for the most part, the system is muddling along. There's no shortage of other places that are open and trading at this point. And so we're getting price information from other venues. We haven't come to a halt by any means, and the options exchanges are up. The U.S. Department of Homeland Security official who spoke on the condition of anonymity said that there was no indication so far that the NYSE has been hacked. While the halt recalled the 2003 outage of NASDAQ-listed securities when a broken price feed forced the exchange to stop trading in more than 2,000 listings for several hours. Its immediate impact was not as great because trading continues today on other venues. The event caused the SEC chair, Mary Jo White, to call the heads of all the public equity exchanges to stress the importance of stability in U.S. markets, because I'm sure they just don't know how important it is to be stable. Anyway, so wow. A lot going on. And I mean, think about yesterday, CIA report, unknown cyber attack. Yesterday they had to halt stuff on China. Today they got to halt it on the U.S. And that makes people really afraid to trade whenever things like that happen. So what does that mean to you? What can you do? Because what if you're in something and they halt it and you don't have a defined risk and it opens massively different? Well, that's why you want a defined risk contract. Options, vanilla call put options, Nadex. They're going to help you if that happens, because at least if they do just fly against you, even if the market is halted, at least you have defined risk. And by the way, they don't have to close. I don't know if you know this, but I've actually seen Nadex stay open. They don't have to close because another exchange halts. They can leave open the option contract, just like CBOE can leave open option contracts. So it's something that if you don't have as part of your arsenal, you may want to get a hold of. You may want to get an account with them. And to get one, just hop on over to TFNN.com, click on the Nadex banner right there on the right side of the page. And so right here, and you'll see the Nadex banner right there. When you do that, then just click on open an account for free. You can also get a demo trading account right here. Once you've done your first live trade, by the way, doesn't matter if it's one contract or 1,000 contracts or $1 or thousands of dollars. You can email them, they'll extend that demo out for a year for you. And, just make sure you just hop in there, get very involved, and learn the product. You need to have multiple things to trade. If you're nervous about trading right now, then you should be, learning how to use Nadex, learning how to do spreads in particular, because you need defined risk products. You need products where you can lower your risk per contract, but increase your stop. Many people try to use the same. I mean, you're using a 10 tick or 15 tick stop. Well, I mean, come on, the market's moving twice as fast, twice as much. You might have to use twice the stop size. There's little things like that sort of that basically are common sense when you think about them, but it's not so common to think about them. So, if you're nervous about spikes, flash crashes, New York Stock Exchange suspending trading, there's so many different impacts of just that alone, and then get something that will help protect you in the midst of that. I mean, the Dow is going to be all jacked up with different stocks, being halted. That'll mess it around, and being aware of just the news like that. I'm not big on trading headlines. I do trade scheduled news. Okay. I do keep track of headlines, like what we just brought up about the New York Stock Exchange. Why do I keep track of those headlines? Because when something like that happens and you halt a bunch of stocks, look what happens in the market. Okay. It can just start going into a chop zone. Now, right now, we actually expect a chop zone anyway, because what? Because Fed fund minutes are coming out at 2 o'clock here in about a little over an hour. All right. So, I look at scheduled news to know what to expect. I look at headlines, not to trade them, but to be like, oh, what's going on? Okay, how might that impact me? Not go, oh, I'm going to short or I'm going to buy, but, do I need to reconsider anything? Do I need to get out of the way? Do I need to maybe take advantage of this in some way? Is there a setup that I can use? Like maybe I can do a neutral trade, not expecting a lot to happen over on the Dow. That is a very high possibility that I could look at with this. So, all right, we'll talk about a little bit more of this here in a few minutes. Stay right there. We'll be back right after this.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And just looking at these stories where, trading got suspended. And let's see if they got it back up yet. So basically just put that in there. So anyways, but we got the announcements coming out here pretty soon. Let's talk about that real quick. And what's happening on that. So let me pull up my news calendar for you real quick. We'll talk about some of the expectations, but just be aware that, like I said, the Fed minutes are about to be released here in an hour. And don't you get caught off guard by that. A lot of people are like, well, I don't trade the news. I don't care if you trade the news is going to impact the market. So you better know when it's going to happen. It's like saying I don't ride the bus, so I don't look both ways for it across the street. So you don't want to get hit by the bus. Whether or not you ride it doesn't really matter, okay? Because it will ride you. So make sure you're aware of it. Let's see, tonight, as far as we talked about the FOMC, tonight we got the Aussie employment change. Usually stays within about a 35 pip range, between 6 and 11 on the Iron Condor. So check that out. And let's see, we got core machinery orders coming out of Japan, China CPI, PPI coming out, and with all the stuff going on, I'm sure that's not going to help them at all. We got the pound official bank rate coming out tomorrow morning. Usually a pretty flat trade. It's more flat when it is accompanied with the euro. So I'm just going to, a little tip on listening to the show here. Pound rate usually stays really flat when the euro follows it. Tomorrow, the euro interest rate doesn't follow it. But its average move is basically 30 pips between 6 and 8 a.m. On that 7 o'clock MPC rate statement, asset purchase facility, and bank rate announcement. Okay? We got a few things. The Canadian NHP coming out. U.S. unemployment claims, just the claims coming out. FOMC member speaking tomorrow. Not a big deal every time somebody talks. People get all like, oh, there's an FOMC member talking. Is it a press conference? Is it a big press conference? Okay? Not a policy statement, but just a press conference. They get asked to speak all over the place. We got a weekly natural gas inventory coming on out tomorrow, scheduled at 10:30. Aussie home loans coming out tomorrow night. So that usually sets up for a nice $30 condor between 8 and 10 o'clock. That's buying the lower spread, selling the upper spread. And we have the pound trade balance report entering at 11 for a 7 a.m. expiration. Again, usually keeps the pound pretty flat. Use caution in all of these news trades. Their stats over the last couple of years, they've done really well, 10 out of 12. But right now with Greece and with China, I mean, they actually may do better in the sense of, there's a lot more implied volatility built into them. Okay, but just, with any of the shock and awe and all that stuff, hopefully things will slow down a little bit on Thursday. That'll give you a little edge there. Just be aware of that. Make sure you're managing your risk really well. News trades are in light of news as scheduled by those governments. They're not necessarily in light of all the current market events that are outside the norm, like a China crash, a NYSE halt, and a Brexit. So on Friday, we're going to have the Canadian employment change and interest rates. Big mover when the U.S. happens at the same time, small mover when it doesn't. So we're looking for a 7 to 9, 35 pip range, so look for $35 minimum profit on that condor. And it also looks like we have crop reports coming out. Big announcement, okay? High impact usually sets up for potential strangles or straddles on Friday. So if you are trading the ags, you better be aware of that report, okay? And so that's coming on out. The wage report's coming out 12 to 1 on Friday. That catches up on our news for the week, and I will see you tomorrow right here on the Diagnostic Trading Hour. Thank you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.